Hello and welcome back to our problem. It's Professor Karn again, continuing our accounting cycle illustration for the accounting cycle from start to finish. We're going to work on step 4 in this illustration, and step 4 is to prepare an unadjusted trial balance. You may also see step 4 referred to as prepare a trial balance. That is the same thing. They mean the same exact thing. There's no difference there. So how do we set this up? The first thing we have to do is start with a proper heading. And our proper heading would include our business name. In this case, it's Walton's Quality Automotive. We're preparing an unadjusted trial balance and the specific date in which we're preparing it. Today that we're using, the date is December 31st of 2016. Then we have an accounts column, a debit column, and a credit column. And how do we do this? So we have to list all of the accounts in asset, liability, owner's equity order straight down the line here with no indenting. So we just have to get those accounts and their balances from step 3, the T accounts that we prepared in the previous video. So everything that's highlighted in orange will directly transfer over into step 4. So how do we list them as far as asset order? You want to list them in order of liquidity, and that's how fast can you convert the asset to cash. So you'd start off with cash, then you'd go to accounts receivable, then you'd have things like supplies, prepaid insurance, prepaid rent, and then you'd get into more of your plant assets, things like building, machinery, land, equipment, so forth and so on. When we get to liabilities, you want to list them in order of current to long-term. Current's anything due within 1 year or one operating cycle. Anything further out than that would be considered long-term. So you'll just list the current first and follow it up by the long-term. In the typical textbook problems, they will specifically tell you if an asset is current or long-term. And then for owner's equity accounts, just list in this order. Go with capital first, withdrawal second, all of your revenues, and then all of your expenses. Okay, so let's see what we have here. Let's go ahead and start copying this over. So we go back to step 3, and again, we just start taking these things directly from here and transferring them over to the other document. Okay, so the first thing we'll start off with is cash, and that was $44,800. Then we'll go to accounts receivable. And that was for $2,600. So you can see that I took these first two. I've got those two already done. Then we'll go to supplies, prepaid insurance, equipment, land. And it looks like that order would be fine as far as liquidity is concerned. So we have office supplies. And that was for $2,000. Then we have prepaid insurance. And that was for $1,500. We have equipment in the amount of $9,000. And land in the amount of $16,000. And again, all of these are asset accounts, so they all have to have debit balances when I indicated them there. And we can reinforce that by seeing, again, these are all balances are all found on the debit side. Okay. All right, so then we can get to liabilities. It looks like we have 3 liabilities. As far as this is concerned, I would list accounts payable first. That's current. Unearned revenue would be current as well. Notes payable, they told us in the problem that it was due in 5 years, so that would be a long-term liability. So I'll list accounts payable first, then unearned revenue, then notes payable. All right. And all these have credit balances. That's $1,880. Then we have unearned revenue. $1,400. And finally, we have notes payable in the amount of $12,000. Just a heads up, this ordering will help you later on when we get to step 6. One of the financial statements, you may have to prepare what's called a classified balance sheet, and we definitely need to know things that are either, especially liabilities that are current or long-term for that step. So it's good to get in the habit of doing this here. Okay, then we go to owner's equity, and it tells us what we need to do, capitals and withdrawals first. So I'll go ahead and take the capital, then the withdrawals. So Walton capital, whoops, and a credit balance of $55,000. Then we get to Walton withdrawals. Again, that would be a debit balance because that's a part of AWE. And again, we can still, all we're doing is copying the stuff again from the T account so we know what balances they have. And then we just have our service revenue and all of our expenses left. So I'll go ahead and list the revenue and then the expenses that follow. So we have service revenue, in the amount of $16,600, and you can see that's a credit balance, as you can see here. And all of our expenses will have debit balances, and we'll list them as such. So we have, let's go in order here, advertising, utilities, salaries, and rent. Oops. Okay, so let's go ahead here and enter the debit amounts. Advertising expense was $1,700. Then we had utilities expense for $180. Then we had salaries expense for $3,800. And finally, rent expense was $1,300. Okay, so now what the goal will be is to see whether or not the debit column, when added up and totaled, equals the credit column added up and totaled up. And so the numbers must match for each column, otherwise we have made a mistake. So let's go ahead and see how we did here. We'll go ahead and bring this down. And let's go ahead here and sum this up. And we can see here that the total of both columns is $86,880. That is a correct total. They both match, so we know that while we can't be 100% positive that we are correct, we are in pretty good, we assume here we're in pretty good shape. The reason we can't say if with 100% certainty that we're correct is, what if we made an entry back, let's just say, go back to this here, the first entry, let's just look at the second one. We say we put equipment in for $90,000 on both of these. We may have found the mistake later on because our cash would have been messed up, but it just, we can't be sure. If these numbers are both the same and they're both a mistake, then the trial balance may not reflect, it would not reflect the fact that we had an error there unless it led you to have an abnormal balance in one of your accounts. So the thing that would do to finish this off would be is that you have to make sure that you have a line. Go ahead and put a dark line here on this particular thing to say that you're summing it up. So we'll put the thick bottom border there. So you hopefully you can see that's a little bit thicker there, signifying that you're equaling this. And then what you want to do is you want to have a double line underneath of your totals to signify that you are showing that that is your answer to this particular unadjusted trial balance. Okay, so that concludes this illustration. In the next video, we will take on step 5, which is the adjustment process.